Exactly how often do buyers lose money when they buy brand new properties?
There is evidence to show that apartments lose more money than houses, and brand new properties lose more money than established properties. This is why we encourage all first home buyers to be very careful when buying off the plan apartments and house and land packages.
Here's one example. In Brisbane City Council, unit values in 9 areas recorded compounded annual losses between 2008 and 2018. That's 10 years, losses over 10 years. This is what happens when there's an oversupply of unit stock predominantly built for interstate investors. Now, if a first home buyer unwittingly bought one in order to get onto the property ladder, they would have been trapped there for a very long time.
And there's a similar story in Melbourne. Between 2011 and 2016, nearly half of all new unit apartment resales, so that's when they went to sell it, sold for less than the original purchase price. Meanwhile, the rest of the Melbourne market was booming for a good chunk of that period. And when the market cycle turned, things got even worse for new unit buyers. By early 2019, 2/3 were selling their apartments at a loss.
Now, in Sydney, things weren't quite so bad over this period of time, but between 2015 and early 2019, nearly a quarter of new apartments had on-sold at a loss.
Supply and demand are what drives the property market. Watch out for seemingly endless supply of homogenous apartments or house and land packages. The demand will always skew to new, away from those that are a few years older. It could take a decade or more for people to recover what they paid, let alone make a gain. You don't want to be stuck on the first rung of the property ladder.
Want to be an educated first home buyer? Check out our online course for first home buyers.
Avoid costly mistakes, make smarter decisions, and get into your first home sooner. Why waste time doing things the hard way?